Let's see the first method for computing profit. It is called a statement of offers method. So in this method, what we do, we basically do the capital comparison. That is, we will compare the opening capital with closing capital and then we find out the profit. But in between, some other adjustments like adjusted or additional capital, then profit, then drawings, all these have to be taken into consideration. So what we have to do is first we have to find out what is the opening capital. That is our step one. We have to ascertain what is the opening capital. And for this, a statement of affairs in the beginning of the year have to be prepared. We have to prepare a statement of affairs in the beginning of the year, and the statement of affairs is very similar to balance sheet. So what we'll do, we'll list out all the assets like this. We'll list out what are the assets we know. We'll list out everything. We'll total them, and that total will be carried as total of liabilities also. So we'll list out all the assets, we'll total them, then that total will be called as total of liabilities. Now we'll also list out what are the liabilities we know. For example, like items like creditors, bills payable, outstanding expenses, bank overdraft, everything. Then there will be a difference, and that difference will be called as capital. Okay, so here if you notice, it is mentioned as balancing figure. So we are deriving the opening capital like this. I mean, we are listing out all the assets, then the total of assets is also called as total of liability. Then that total is compared with the other liabilities. Whatever liabilities we know, we have to list them. Then the difference is nothing but the capital. So in this way, we will ascertain opening capital. Then we'll take step 2, where we have to ascertain closing capital, and it is also very similar to the way in which opening capital was ascertained, but only difference is we have to ensure that if any adjustments are there, that should be taken into consideration. So we have to prepare a statement of affairs after all adjustments at the end of accounting period to ascertain the closing capital, right? So now we have opening capital, we also have closing capital. Then step 3 is we have to add the amount of drawings to the closing capital. So it means the focus is we are going to start from closing capital. We are going to start from closing capital. With this, we will add the drawings. Okay. So that is our step 3. We have to add the amount of drawings to the closing capital. Then step 4, we have to deduct the additional capital introduced. So minus additional capital, and this would give us a capital, and that capital is called as adjusted capital. Okay, this capital is called as adjusted capital. So now we can find out profit or loss by comparing the adjusted capital with opening capital. So less opening capital. Now this difference, I mean, when you compare adjusted capital with opening capital, you get a difference, and this difference is going to be the profit or loss. So what you have to understand here is, if adjusted capital is greater than opening capital, okay, if adjusted capital is greater than opening capital, you will have profit. If adjusted capital is less than opening capital, you will have loss. Okay, so once again I'll repeat, we have to start with closing capital. So I'll take this in a separate statement. We'll call it a statement of profit or loss for the year. We have to start with item A called closing capital. Then whatever drawings we have, we should add them, add drawings, right? Then we have to subtract whatever additional capital introduced. So that will give us what is known as the adjusted closing capital. Then from that we have to subtract opening capital. So what we get here is net profit or loss for the year. So please note, if adjusted capital, or if adjusted closing capital, to put it rightly, is greater than the opening capital, then we have profit. If adjusted closing capital is more than opening capital, then we got profit. If adjusted closing capital is less than the opening capital, then what we have is loss.